You know, there's been a surge in commodities. It's undeniable over the past year, with cotton, sugar, and corn leading the way. They've had triple-digit returns in those three commodities. Take a look at that graph right there. Well, my next guest says a big sell-off of as much as 25 to 40% could already be underway. David Stroud is co-founder and CEO of TS Capital Partners, a hedge fund that specializes in trading commodities. And David, you traveled with Adam Johnson, our markets desk reporter, over to China and did this very interesting series of stories that aired over in China. And tell me what your interest is in there. I do know every time we get an economic report out of China, it does play into what goes on in the commodity markets. Oh,
indeed. Everything that they're doing is going to affect the entire world. They have a drought going on with the largest river in China right now. So how does that affect the United States? It affects wheat prices in the United States because wheat farmers have to grow more wheat for consumption throughout the world. So, and you have 1.4 billion people over there, and some say you have as many as 1.8 billion. So they are, we are very much married to China, more so than we even think we are.
So the interesting thing I think about the commodities market, and I know Adam understands the way it trades very well, is that there's both the fundamental side, right, which is things like China, and then there's both sort of the technical side or the trading side of this market. And we've seen a lot of these stories on the periphery about speculators in these markets. So you're looking, part of what you're forecasting for is a pullback. Is that on the fundamentals, or is that on the sort of technical side?
That's on a combination of the two, and it really what I think, what I've seen through experience, is about the last 10 or 15% of a price increase or a price decrease is done by speculators. It exacerbates the return. But the fundamentals, because of slowing economic data in the United States and potentially rumors of the same thing happening in China, I think the fundamental story is going to push prices down perhaps 25%, and that additional 15%, which would get it to a 40% decline or more, would be exacerbated by speculators.
Hey, Adam, I want to bring you in here. I know you and David spent a lot of time on the road together. I'm sure you talked quite a bit about how this market trades.
Yeah, we sure did. And Dave, question, because it sounds like what you're effectively saying is that even though there are droughts in China, which are creating shortages of crops, ultimately these agricultural commodities are trading lower because there's effectively a slower economy here in the U.S., and then also speculators are scaling back their bets. Is that right? So ultimately, they go down in spite of the droughts in China?
Yeah, I think that's what's going to happen. And people that are in the commodities market, that are in that space, we've expected a pullback. And if you look at the markets, if you look at the top 20 commodity markets that trade in the past 2 or 3 weeks, they've literally bounced just around maybe 1% here and 1% there, and there's been a great deal of indecision. And usually, what happens right after that, you'll see either a large decline or you'll see a large increase in prices. And I think that the next leg is going to be lower.
How do you figure out how big the pullback is going to be and what's going to be the catalyst for it? We talked about pullback of 25 to 40%. In what specifically and when?
Well, what we look at is if you look at the prices for the past 12 months, sugar, corn, silver, all of those prices are up more than 100% in the past 12 months. So even if they had a 40% pullback, you're still looking at a high double-digit return. So if you base prices off of what happened in 2008, which appears to be a very similar situation, and also consider that commodities are about 3 times more volatile than the stock market, you would see a normal correction being in the 30, 40, even 50% range. And I believe that an analyst strategist from S&P came out this morning saying that they would expect about a 50% pullback in commodity prices based off of actions that may happen in China.
And when does that happen, Dave? Is there a particular catalyst that gets that going?
One of the things that happened a few weeks ago, and I heard the CEO of the Chicago Mercantile Exchange talking about that this morning, when you start to see margins being raised, in other words, silver margins going from a year ago, if you bought one contract of silver, you had to put down about $4,250. Today, you have to put down $22,000. So that takes a lot of speculation out of the market, and traders also look at that as a catalyst to say there are people that are at the exchanges that are saying we need to reduce risk.
All right, David, thank you so much for joining us. Adam, thanks so much. David Stroud, that was CEO of TS Capital Partners, and we had Adam Johnson, of course, a good friend and colleague to David here at Bloomberg News, joining us.